My trading week has been 3 days for a very long time now. The idea that people think that they have to trade 5 days a week and they'll make more money, that's just a myth. You don't make more money by trading more, you make more money by having more capital to trade with. My mindset is always quality over quantity in trading, quality and consistent decision making, and what puts me into that flow state where I'm able to make good, consistent decisions and profit over time by flawlessly executing my 15-minute strategy. This is how I set up my 3-day trading week. I never trade on Mondays and I never trade on Fridays. Typically, they're going to be the worst trading days. And that's just because normally we don't see massive moves on those days. And for me, with my strategy, I'm looking for 30-pip moves. So I want to maximize the days where we typically see 30-pip moves. So on Monday, when the market opens, all I'm going to do is just observe for the day. And it's light observation, right? I'm not sitting here at the charts watching every single candle. I'll watch from my phone while I'm out and about and enjoy my day. And this is literally why I trade 3 days a week as well, is so that Monday that I have is an extra day for me to go and do whatever I like. I think a lot of guys forget that this is why we get into trading, is so that we can have that freedom to go out and do whatever we want to do and go and enjoy our lives. Because even though trading is absolutely incredible and we can learn so much and develop so much from trading, we are doing this so that we have more time freedom. So when I say light observation for Monday, what I'll do is I'll put alerts on swing highs and swing lows, and I just want to see what price does at these points. Do we extend through, or do we reject and move in the opposite direction? And that can help give me sentiment for the next 2 to 3 days of trading. So then we move into my first trading day on Tuesday. Now, what I'm about to go through is my process of how I look at the charts. If you want to see this done live, go on to my Instagram. That's where I call the trades before they even happen, so that you can see I'm using exactly the same process when I use the live charts as to what I'm showing you here. So I'm always looking at the structure of the market first, and then I look at trading locations, and I look at swing highs and swing lows, and I use RAMC in order to give me a narrative for higher or lower prices. So let's look at that now. Monday has already opened, and what's it done? It's created a bullish trend. This is from a point of mitigation here on the higher time frame, from a range on the higher time frame. And we've seen bullish initiation structure coming into the market. Create this high, low, and then higher high here. So we know that we're in bullish trend continuation structure. Then what am I doing? I'm looking for trade locations. This is always the same thing that I'm looking for. The reason I look for trade locations is I just want to make good decisions at the right places. If I know we're in a bullish trend, I'm just going to look from the low point to the high point. I'm going to put on my premium discount, and I'm going to make sure I look for any ranges or any orders that are sat at 50%. So here's 2 areas on the chart that's at 50%. We can see that prices created the manipulation below this low here before initiating here to the upside with aggression and speed, as we see here. So I know this is an area that price needs to react from the future. Again, with my strategy, I don't have to predict every single area. I can literally wait for price to get there, react by showing me aggression and speed, or show me some sort of bullish candle, and then I can go back, see where it's reacted from, and then I can trade it in the future. I don't trade like most people where they put on all these areas on the chart where price has to react from. I literally look at the price action. I read the price action on the right as price comes into the area. If we start to slow down and run below lows and don't extend, then I'm focused on what's happening within the charts right now. When we start to see aggression and speed in the market, that's where I'll go left, see where we've reacted from, and then I can create a narrative for higher prices using range, initiation, mitigation, continuation. And at this point here, at the mitigation point where I go back and see where prices reacted from, I'll look for my 15-minute setup here. Obviously, timing is very important as well, making sure that you're trading at good times, because moves happen at specific times within the market. But this is what I'm focused on: good locations, using RAMC to play mitigations and continuation phases, which are normally the biggest moves in the market, at the right time on the most liquid days of price. Tuesday, Wednesday, and Thursday are always going to be the most liquid days, where the biggest moves are the most likely to happen. The next thing I'm always looking at is swings, swing highs and swing lows. So if we're not in a trend and we're in a sideways range, I'm going to be waiting for price to move above or below a swing, and then I'm going to play the opposite direction. Swing highs and swing lows are liquidity points. So as we see on the chart here, this is a swing high in the market. This is also a liquidity point. Liquidity is targets following a bullish intention. And what does that mean? Well, if we create a sideways range, we create an initiation, and we pull back, that creates a swing high within the market. So when price pulls back into the sideways range and we get the RAMC continuation phase, we know that this high then becomes the target for that continuation to the upside. So it's a liquidity point. Price is targeting it following the bullish intention from the sideways range and initiation, mitigation, continuation. And once price has taken out that swing high, that gives an opportunity for a new intention to come into the market. And what do I mean by intention? Well, we'll just look for a sideways range to the left. We'll wait for price to slow down in the future, and then we potentially trade that back in to the leg. Then where does the target become? The previous swing there to the downside. This is just the same cycle of price that happens over and over again, but this is how I'm using RAMC to give me intention and direction within the market. But this is exactly how I trade my strategy, my setup at good locations, trading with the higher time frame intention, and that's where the biggest moves are going to come from. So for me, this is my entry right here for the long. I always use a 10 pip stop loss with my strategy, and the setup is always exactly the same every single time. I'm always looking for a fractal low to be created at a point of mitigation. I'm looking for the intention to be shown, and then I look to get involved at the close of a candle, playing a continuation of the intention. The reason I wait for closes within the candle is so that once we see manipulation happening within the market, price has shown me it doesn't want to continue any longer at that point of mitigation. And then the candle is the confirmation of that location that I want to trade from. Then the 10 pip stop allows for any drawdown within the market if price wants to create a sideways range or wants to run below that low again, and then see continuation to the upside. This is something that I've back tested for as long as I can go back on the 15-minute chart, which is 2 years and 8 months. So if it's something that you wanted to learn as well, you have all that data where you can train your eyes to see the setup at the locations and see it working out for yourself. So that's my Tuesday. Then what happens? Well, price runs the swing high. Like I said, when we run swing highs and swing lows, that gives an opportunity for new intentions to come into the market. We just have to wait for price to slow down, look left, see where it's reacted from, where we can see this FU here. That's a buy to sell price delivery, but it's also a sideways range. So we can see the reaction here back to the downside, and then price is moving sideways. So we've got the swing low point to the swing high point, and then we move into day 2. So now we can think about price inside a sideways range. Again, what we're going to do when price is inside a sideways range, we're just going to look at good locations, or we're going to wait for swings to be taken out. So the location tool allows us to look at the bottom 25 and the top 25% in the market, which is the highest probability locations that we're going to see the biggest moves in the market happen from. So again, we're reacting to what price has shown us. It's shown us it doesn't want to continue any higher. We've moved into a sideways range. We're looking at the best locations because again, all I care about when I come to the charts on Tuesday, Wednesday, Thursday is I'm making good trading decisions at good locations. That's what creates consistency within my trading. If I'm always trading from the same locations and I have a positive risk to reward system, it will play out over time. So here, unfortunately, with my entry, there was no sell setup to get involved at the edge of the range here. There was only a buy setup to get involved, which I did get involved in for a continuation, because if this was range, initiation, mitigation, continuation, and we continue this bullish trend, this swing high would have become what? The target. So we got into this trade here long. I always close at the end of the session if price hasn't moved. So this ended up being a break-even day for me. Didn't move in the session, so it's very likely not going to move outside of the session. So I always break even at the end of the session. So that is Tuesday complete. Now we can understand on Wednesday that if price isn't going to target this swing high, what's the only other swing on the chart that price could target? It is going to be the swing low here. So we can see that price didn't continue here to the upside and continue that momentum to the upside. In fact, we reacted from the edge, and now we're seeing price in this bearish continuation structure here to the downside. So now we can think about where price might want to target the swings. And if it hasn't targeted the swing high and we've seen no continuation, then it's very likely going to target the swing low. And when we think about RAMC, if this is range, initiation, mitigation, we know the next target for price is going to be this swing low down here. So all of these areas on the chart where there is liquidity are all going to become our targets here to the downside, following the intention created in this sideways range here. So that gives me my narrative for day 3. I'm looking for continuations down into this low that we have down here. Now we've seen a very strong initiation here to the downside during London session. So when I come into my session in New York, price is moving sideways. So the only thing I care about when price is moving sideways is what? Good trading locations. So for me, I don't look to trade till after the news. So this candle here that we have, which is that doji candle, that is a news candle. So for me, there was no setup until after that doji candle was printed and we see a move up, pull back, run above that high, and then we get a bearish engulfing candle. So that is my manipulation happening. Again, at good locations, prices run above that high at the edge of the sideways range. So exactly how we were using the large sideways range here. Prices also in a smaller sideways range here, and we can apply the same principles to make sure that we're trading at good locations. I see my setup at a good location. I see the intention coming into the market here to the downside with the aggression and speed. Again, that's happening from a previous sideways range here. Prices contained between this low and this high before we break out to the downside. So this is my general area. So when I see the point of mitigation for a potential continuation phase and I see the aggression and speed coming into the market, this is where I want to look to get involved for that continuation there to the downside. Again, always using a 10 pip stop loss. So I don't have to do any thinking when I'm executing the trade. I just need to make sure it's 10 pips and execute. And this is a trade that didn't move in the session, it moved in the next day, but still a fantastic opportunity to get involved in a continuation using exactly the same principles of swings and trading locations. If you had any questions about my 15-minute strategy, you can message me on Instagram. Please make sure you get the right Instagram. It will be in the description of this video. There's a lot of fake people out there. And if you wanted to learn my 15-minute strategy, you can do at notjustatrade.com. I also teach it every Tuesday in webinars where you can have an opportunity to speak with me, ask me any questions that you have. Thank you guys for watching, and I'll catch you on the next video.